What's up, guys? Nick here, back with another video, and hope everybody's doing well. Hope you guys checked out Will's last video going over Bitcoin, Ethereum, Shopify, and a couple other pairs. So because he did those, I'm not going to be going over those. I'm going to be going over this list right here. And if you guys want to see anything else added to the list, feel free to reach out on Discord or on Instagram at Chart Samurai. So also in this video, we're going to be going over market structure and just the basic things of TA. Okay, so let's dive into it. When you're taking a look at technical analysis, this is a skill set that you can use on any pair. I use it to day trade currency, day trade commodities as well, and dollar cost average crypto. You can use it for anything. That is the beauty of TA. Anything that has candlesticks, you can go ahead and look at it. If you guys didn't see the last Saturday's Q&A, I highly suggest that you go and look at the recorded webinars and go check out last Saturday's Q&A, because we were going really in depth into all of the markets, and we were on there for like 2 hours, 3 hours, something crazy like that. And me and Will were just going in. But in any event, I did this little pyramid here to kind of give you guys an understanding of what we're looking at. So when it comes to TA, your foundation is going to be support and resistance, which is just floors and ceilings. For those of you that don't know, it's just a level of support and a level of resistance. If we take a look at oil, we have resistance here, those ceilings, and then support is the floor, right? If we look at a line chart, it'll be a little easier. Floor, 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 floor. And we have ceiling, 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 ceiling. All right? So that's pretty much support and resistance. I know probably you guys know it, but, you know, just to review. So anyways, from support and resistance, we're now going to be able to find our supply and demand. Our market structure, which is going to be a series of support and resistance. Uptrend is going to be higher floors and higher ceilings. Downtrend is going to be lower floors and lower ceilings. And we're going to go in over all of that, just going through the pyramid for right now. And then lastly, we have supply and demand. This is going to be the famous fair value gap, or the imbalances that I always talk about, and order blocks as well. And we'll dive into those later in other videos. For now, we're just going to focus on market structure. So after those good stuff, lastly, you have chart patterns. That's going to be the M's and W's, head and shoulders, flags, wedges, all of those things like that. And we'll go into that more in depth later as well. All right. So we kind of all know support and resistance. If you don't know support and resistance, I mean, you have a great course to go through that tells you all about support and resistance, as well as market structure. In this, we're just going to be diving a little bit deeper. But yeah, so the very basic market structure is going to be how you identify your trends. So this right here is an uptrend. This right here is a downtrend. Very simple stuff. What we're going to look at is our low point and our higher low point. So for an uptrend, you have a low, higher low, meaning this low point is higher than this low point. Very simple. All right. The next part of it is going to be high and a higher high. And that just means, again, the same thing. This high point is higher than the previous high point. So when the market is making higher lows and higher highs, you have an uptrend. On the reverse end, we have our downtrend. And it's going to be making lower lows and lower highs. All right. So this is the very basic foundation of market structure and technical analysis. If you can understand this, you'll be able to find some success in your trading and investing. And it's important to note, because this is how you're going to determine bear cycles and bull cycles, market cycles, right? Obviously, we know we're in a downtrend right now for most crypto pairs, almost all crypto pairs. If you guys find one that is bullish, let me know, please. Anyways, it's also important to know, because for those of you that don't want to margin trade and you're just looking to dollar cost average, where do you think you want a dollar cost average? Well, it's very simple. At each higher low, right? Why would you want to buy on the higher high when you can get in on the higher low? And the low points are going to give you great opportunities to dollar cost average. When people are scared, they're selling, boom, you buy in. Take profit, get back in on the higher low. Take profit, get back in on the higher low. And that's how you kind of maximize your uptrend. All right. So the next thing we're going to look at is what's called a market transition. All right. So uptrends, bullish until the higher low is violated. Downtrends are valid or bearish until the lower high is violated. All right. And I guess I'll add this for your notes. Hopefully you guys are taking notes and not just wasting your time. Higher highs and higher lows. Lower highs and lower lows. All right. Very simple. Make sure you take this down on your notes, because we're going to be building from this knowledge. And when you guys ask me questions, ask more questions, I'm going to tell you to refer to this video. All right. So let's continue. Hopefully you guys take this note, pause the video, take the note. What we're going to look at now is transitions. So if the market's in an uptrend, we have a higher low, higher high, higher low, higher high. Like the note said, once a higher low is broken, you wait for a retest and a follow through. And now we know that we're in a transition to a downtrend, right? So sometimes the market does what it wants. It might sweep below and just continue going high. There's other things that will let you know when that is most likely going to happen, right? But you know, that's for the sake of this, we're gonna look for a break, retest, follow through, right? Downtrend, just like the note said, valid until a lower high is violated, a retest, and a follow through. This would be the break of structure right here, and this is your follow through. All right, so we're gonna go ahead and look at some live examples. And this is very important because, again, we could just go to Bitcoin. If you know market structure, go on a weekly, it's a little more simple. low, high, higher high, break at the low, retest, follow through, we're in a downtrend. In the lower time frame, it looks a little bit cleaner, and you get to really see the market shifts. We can mark it off all the way from back here. So you have a high, a low, higher low, higher high, a break, retest, follow through. Okay, you know we're in a downtrend. High, low, lower high, lower low, lower high, lower low. We have a break, a retest, and a follow through. Now we know we're in an uptrend. We have a high, low, a higher high, higher low, a higher high. We have a break, a retest, a follow through. We're in the lower low. Lower high, lower low, lower high, lower low, lower high. That gets broken. It comes in retest. We start consolidating. Doesn't really get a clean break. Lower low. So obviously you can see the market is choppy, right? After we had this breakage structures, and what's consistently happening? We're getting lower resistances, lower resistances, lower resistances, lower resistances. If you peep, it doesn't really break through clean. If we go on a line chart, it's kind of just stuck on that price. We get a sweep here, but we get a retest and we don't get a higher high after that. So we know that this is a fake out. And then boom, price continues lower. All right. So then take the line chart, take these tools right here, go on TradingView. This is a free website, and practice this, because now you're gonna understand our analysis a little bit, right? Actually, no, I'm not gonna use that. You're gonna understand our analysis a little bit because we use this to understand our trend. Once price breaks and follows through, now we know, okay, the algorithm is taking profit. Market maker is not a person. The market maker is an algorithm. When the algorithm is set to sell, it's in a downtrend. When the algorithm is set to buy, it's in an uptrend. It's very simple. It's just identifying what trend it is. It gets confusing after a while sometimes because you have all these different ideas, and it starts to confuse you, and it gets messy. But that's why market structure is key, and the trend is your friend, right? Because what happens, you start wanting it to go to 100K, but the downtrend is evident, and then you start losing money and you're wondering why, and now you're in a hole and you keep trying to buy to get out the hole, and you're like, I'm just gonna dollar cost average, but you dollar cost averaging on a downtrend, and every time you see a little pullback, you get excited, you start buying, and that's how you end up stuck. And that's how the market maker wants you to be. So that's pretty much it for market structure. Let's get into analysis. That was that on that little rant. All right. So let's go into XRP. So obviously, I'll clear this up from the last analysis. And we got those little short-term sells. We predicted price to go lower or come up here or come higher and come back down. Right. Let's take a look at the market structure. Right. We're gonna get your trend from the daily, weekly, and monthly. Right. Because one thing, a down leg, right? Like this is one big down move. It's a downtrend in market. Excuse me. Let me use a better example. This uptrend, this pullback right here, right? 1, 2, 3, 4 bullish candles on a lower time frame. It's an uptrend, right? So that's why we stress zooming out is very important, so you don't get kind of lost in the sauce, because you might go, oh, it's an uptrend now, but your actual direction based on the higher time frame is a downtrend, and then you don't end up getting lost in the sauce and then getting killed on the sell. You know, right now it's going like this, right? So if we zoom out even a little bit further, you know, we really just see this just consolidation, right? We go to the weekly, we see this consolidation. It's been this one long, big bearish push down, and that's just kind of where we're at, right? So price is kind of slowing down after this very big push, and it's trying to find a lower high, right? So we know where we are in the trend. Dropping down to the daily time frame, we see price break this lower high, which I really wouldn't count a lower high, even though technically it is, just because it's really just sideways movement and it didn't create a lower low. So we're really just, I'm just anticipating price to kind of come to this fair value gap, and then I'll reevaluate should it get to that point. Right. So when we're looking at price right now, we're seeing this bullish momentum. I wouldn't say it's time to buy, although this is my favorite pair personally. You know, I don't think you can even buy in the United States right now until this case gets lifted. But what I would say, if you have XRP, keep holding it. It's not a pair you really want to sell, because it's really just a ticking time bomb. Because technically, like, again, if you watched the last video, I showed you how price has been delivered efficiently on this pair. The all-time high has never been retested, and this was even while all the other pairs were getting tested. This pair never got its chance. It also retested the lows and cleared this liquidity here. So this is probably one of my favorite pairs, and this is not a bad place to start buying up at. However, I would look for these double bottoms to get taken out, like I mentioned in the last video that I did. We have 1, 2. I would take a look between this range to really start accumulating XRP when it comes to XRP. However, anyway, for where we are right now, we're really just consolidating on a higher time frame. What I really want to see again is this same projection. I want to see these buyers get stopped out, and then a push to the downside. Nothing much has really changed for this pair as far as analysis. When we take a look at the intraday level, we just see price kind of flying up. You know, maybe we get a pullback and a short-term buying opportunity into this fair value gap, and then we continue higher, and then I'm pulling the trigger for a short up in this range right here. You know, should price stop me out, so be it. That's what I'm looking at, and I think it's gonna come and attack this low here still. So there's not much to really follow up on. Again, just remain patient, stay on the sidelines. This is your time to study, buckle down on your TA, and really get some value. Use this time to study, use this time to build your skill set, so you're not really worried about what's going on in the market. You know, you're just worried about getting better, getting more knowledge. You know, that's what this time is about. So let's go ahead and jump to the next pair. Oh, we'll do Ethereum, so I'm not gonna really touch Ethereum. So let's go on to Litecoin. Let me get back onto my blue list. So Litecoin, Bitcoin, Ethereum, they're all gonna they're very correlated, so they're really gonna move the same. Let's go ahead and do a top down, because I've never done a top down on this pair before. So I'm gonna do that just so it looks a little cleaner. Get rid of this nuance right here. All right, so when we're looking at the monthly time frame, very simply, you know, if we take this off, you can kind of see just how big of a move this is, man. Like, we always got to remember in crypto to keep a sober mind, because like these big moves like this do not happen in normal markets. These things do not happen at all. So anyways, price took out the highs, and so we can assume that it's going to take the lows, right? Just looking quickly, we're going to assume it's going to take the lows. Double bottom right here. There's plenty of money sitting right here, people that bought right here, and there's also like, they're selling here, there's stop losses here, there's so much money under this price. You know, you got to look at liquidity as like a magnet for price. Price is going to move from liquidity to liquidity. And so that's kind of what you see happening here. Price comes, runs the highs, and now it has to come take the next liquidity target. The next liquidity target is going to be these lows. I'll get rid of this stuff, right? As far as the utility of the crypto, the fundamental, that's something that you would look at, you know, the guys that do that. I'm a technical guy. So, you know, when it comes to that stuff, ask Alex, you know, the Marty, the other guys that are in there, because that's what they're there for. This is what I'm here for. In any event, I'm really looking for these lows to get taken out. These are some stuff that you could have been targeting. Thing about technical analysis that I love is that you don't pay attention to the news. News is just an excuse for price to move. And so when you see something like this, you understand that when we're up here, oh, you go, oh crap, there's a lot of room for price to fall. And so what happens is you don't start buying up here, getting greedy, right? And you're able to be sober-minded in the market, understanding there's plenty of downside potential. So anyways, let's go ahead and review. We have a break of structure right here. Price retest, the what? Fair value gap. It's a fair value gap right here. And I'll teach you guys more about fair value gaps in another video. Don't want to overwhelm you. And as well as Fibonacci as well. So get a nice 61.8 top, and now we're pushing lower. You know, the first take profit for Fibonacci is right here. And, you know, we actually met it to the T and reversed. So, you know, that's just something to note. So we get that break of structure, that transition in the market structure. We know we're obviously in a bear cycle, but just to look at it in the market structure perspective, we're going to go zoom down now to where we at currently in price. And we see that price is kind of stalling from this area. You know, it really has to, for me, look at all these wicks right here. That's a lot of liquidity. Again, there's buyers all in that wick on a lower time frame. Those are structure points, right? So people bought in at that price, meaning there's money there. They want to sell clearly. So we're going to be looking, they're looking to attack this so that they can get out, right? They're taking profit now. Again, we still have these lower price to look for as far as a target in the long term before I even consider buying this up at all. What we see here now on the weekly time frame, we always have to identify our range, and our weekly range is going to be from the last lower high to the new lower low, right? We're below 50% in the market, meaning that we are in a discount range, meaning that people are going to be buying here. The market maker is never going to buy when we're in a premium, meaning above 50%. Up here, they're going to be selling, and they're never going to sell when we're down here because it's a discount and a premium, and they're smart enough to follow buy low, sell high. All right, so we see price finding some type of support here. We're on a weekly time frame. Immediately, I'm going to look for some retracement targets, and that's all these are. It's a fair value gap right at 50%. I think this is a great place to eyeball for a short. I would not be buying because anything can happen at this point. However, if we do keep pushing up, this is the area I'm going to look at. So when we drop down to a daily time frame, immediately I kind of see this trend line right here, and I see this wedge forming right here. When I see the wedges, the way I trade the wedges is whichever way it breaks out first, I'm looking for it to continue the other way. So if it breaks up to the outside, I'm going to anticipate that it comes to the fair value gap, and then we're going to be taking lower for that liquidity level to come lower that I showed you on the higher time frame around $38. So the fair value gap, if we refine it down to the daily time frame, we can refine it down to there and get a little bit of a more precise area. So it's going to be from $92 to 85. Again, I'll go a quick explanation. We have sells all through here, but we have no buys offered in this area. No buys offered in this area. Only sells were offered, so that it was delivered inefficiently, and that's what creates an imbalance. or a fair value gap. So we're going to be looking for that in the market. Let's go drop down to the H4 time frame and see what's going on here. Again, we have all this price action right here. Let me turn this. If you guys are wondering what these things are, it's just the daily. It's just the period separator. It's just when the new day starts, so I can notate what is the first candle of the day. Remember, I showed you guys the first H4 candle. If it breaks the low, it's going to come for the high, right? So we see here it broke the low, came for the high. On this one, it broke the high. It couldn't really quite make it to the low. That's okay. That's not the only reason to trade. But we see here, kind of test the high, breaks the low. And here again, we see it test the low, breaks the high. Here it breaks the high, takes the low, and then comes back up higher. And this is something to back test on your own. You know, that's kind of why I keep it on there. Works better on some pairs than others, but you always line it up with the rest of your analysis. So in any event, with Litecoin, it's not much to be really day trading in here. I don't like the movement on this pair at all. You know, obviously, to give you guys context, you see where it retested from this fair value gap right here. This big buy. We know there's a lot of money in this candle, lots of liquidity, and price was delivered inefficiently. So what happens now? We see a breaker structure here, and we're just going to be looking for some type of retest and continuation higher, you know, or potentially it just continues going lower. Right now we're in what's called a transition phase of the market. Immediately the first place I'm going to be looking for potential buys if I'm going to short. And this is margin trading, and this is not financial advice. This is just what I'm going to be looking at. And you guys are going to get a feel for how I trade. Right at 50%, something to keep an eye out on to see if it respects, then we can really anticipate it coming up higher. And probably the next point to reevaluate is going to be this wick right here. But for this pair, I would really just keep it to the daily time frame. You know, I still want to see this get broken over here before any type of bullish sentiment on this pair. And then also it needs to retest and continue higher. But my target again is going to be that fair value gap. Seeing that we have this wedge forming, I anticipate all this liquidity to get taken, come into the fair value gap, and continue pushing lower. All right. Or, you know, it could simply just fall, right? It's just being fluid with the market. But based off what I'd be looking at, this is a kill shot area for me. This is a kill shot area for me. We'll just be watching to see what price does. Goldilocks, one of my favorite pairs to trade. Definitely caught a nice move on here earlier this week. Shorted right in here. I shorted in here. Took this all the way down to there. Made some nice money. And really just been enjoying this pair. This gave a great, you know, this is too much sauce for y'all right now. We got to build to there first. This is entries. And this is what I was telling you about. If you go to the lower time frame, we have that wedge. It breaks out the wedge. W sell, breaks lower, breaks past here, comes up 50% of a wick. That's something that, you know, that's a little bit advanced. We'll go over that way down the line, but that's just a type of day trade entry that I take. And then boom, we have a 61.8 after the break into the fair value gap. So those 3 potential sells that you could have caught, 1, 2, and then 3 right here, all would have got you significant profit. So let's take a look at what's going on when it comes to gold. If we start at always starting at the monthly time frame, I'm gonna go ahead and hide my drawings so that we can see a clear chart. And I'll go ahead and see if I can annotate this zoom a little bit better. All right, so we had this huge move up and price kind of just going like this. All right. Should we see a break here? We can reevaluate. Obviously, right now, the market flow, the weekly, daily, H4 and lower time frame trend is very bearish. I do see off the top of my eye all of this liquidity right here, right? All of that liquidity right here. See, 1, 2, 3, 4 taps, all in that same price range. Let's go ahead and clear that, and we can start working on trading view. Look at that. So we can anticipate price coming to attack these lows right here. And then there's plenty of room for gold to retest. Off the top of my eye, I could definitely see this fair value gap getting touched. I forgot who it was in the chat that I was reading, and they made a great point. Actually, no, I think it was Will on the last webinar. He was talking about how they've loaned out more gold than people actually have, and they're buying bonds instead of the actual thing. So should people come to cash it out, the price could drop significantly. And technical analysis will tell us that there's plenty of room for gold to drop. Obviously, we've been in a huge uptrend. Where did price stop? After taking the previous liquidity and the highs of 2011. Price is always going to come to retest those highs, and is always going to come to retest those lows. We always see it, and we see price come and do exactly that. Comes and wicks out. The good news for gold is that it did live double bottoms. So we're now sitting in this range right here. So let's drop down in the weekly and see what we can make out of it. And, I could just go ahead and delete this stuff. So obviously, we have that area liquidity and that area liquidity here. Again, we have double tops, triple bottoms, a whole bunch of money that is stuck in between. This was sweeping something else way back in the past that we saw on the monthly time frame, the 2011 highs, which is marked off by this line right here. And so we see again how price comes and sweeps liquidity consistently. It's something that price will always do. It needs to retest those old prices. Off the top of my head, though, I do see this fair value gap right here. This is the last lower high, and that created the last higher low that created a higher high. And so you could see that we're stuck in this range right here. Price came and tapped this 61.8 a few times. And so now we're just kind of waiting to see what the market wants to do. This is something to kind of, this is honestly a pair to really day trade, seeing that we have all this momentum here. But I do want to take out and give you guys some key notes. When we see this wedge, we see price break up and then short. That's something that I want you guys to study for yourselves. Take a look at and just train your eye. It's all about training your eye so you don't have to depend on us. The whole goal is that you become independent traders on your own. Or else what's the point of trying to learn to sit and be dependent on somebody else, right? We all want financial independency. So I encourage you guys to go and study. Go and study the chart. Go and study the chart. Right? So in any event, we get the break high, and then what do we have? This is a nice W sell. Very clear W. Very clear W. Very clear M. This is something I'm always going to highlight for you guys. Very clear M. Very clear W. M buy. This whole thing looks like a W right here before it's sold down. Whoops. But just something to note, take note of. Again, little W right here, W action right here. M sell eventually bought up to. This is something to back test, keep your eye on, train, right? Obviously, we know that Bitcoin and gold have a nice correlation, as well as other cryptos. So that's why we're going over this stuff. Let's go down to the daily time frame and see what price is looking like on the intraday level. When we take a look at price, we had a very big bearish move, so we can expect price to try to find support and kind of start to consolidate. Now that we're here, I don't see much places to want to look for a buy. I would rather wait for price to find some type of level of support. And then we're looking at this fair value gap right here. And we can measure this as a range right here. And that's what I'd be waiting on, waiting for some type of sell opportunity up in here. Other than that, I really wouldn't be touching this pair based off of the fact that for me personally, I made the money right here. And then we could take a look and just show you like 61.8, 70.5. You know, I think this is probably where I took the trade. I actually don't remember at this point. But, you know, it's coming out to the T. It's very, very accurate stuff. Just so you guys can build faith and wonder why I'm always using the fibs. Like, it's a great measuring tool. Helps you really kind of understand where you are in the market. And it's a great tool to use. We'll go over more how to use it. If you guys want to look at the fib setting that I have, you just go from here to here, hit settings, and you can screenshot this, and these are my fib settings. I use this to trade everything. It's a very, very useful tool. And here you go. So take a screenshot. You can set it up like this if you want. Just showing you what I do. And yeah, guys, so happy trading, right? Study this stuff. It will help you out in the end. We are in halftime. All right, so we're not gonna be touching this. Let's go ahead and take a look for the Dow Jones or the US30, the top 30. Another one of my favorite pairs, something that I've obviously, you can see I trade a lot of. I've been trading this for a while. That's why it's all marked up. But let's go ahead and start doing a top-down analysis. As you can see, price makes a W and sells, and we're in a recession, right? But we're not going to be in the depression until price starts to go into a downtrend. What do we notice here that's important? What we notice here that's important is that price has been on a bull run since 2008. What that means is that they've been printing new money since 2008. What they did in 2008 was equivalent to putting a bandage on a gunshot wound. I'm not going to rant too much on it because we did talk about it quite a lot on Saturday. So again, that's why I'm going to keep referring to Saturday's Q&A. And we could go back onto it if you have more questions this Saturday when we're going to be on the Q&As again. But we've been in this huge bull run, right? If we go to the 12-month, we just look like this, right? That means each candle is a year. So for the last 10 years, we've been just going straight bullish. We need to pull back at some point. That's just what comes up must come down, that type of thing. So let's go ahead and dissect a little more. I'll go ahead and erase all this stuff. 2020, we had a big crash. Where does it go to, guys? Fills the imbalance. Fills the imbalance. This is something that I will touch in later, but this is an order block. Like the market, if you ever get lost in the market, look left and see why it's reacting. There's low points. It reacted because of this. You could have made a crap ton of money buying this, but it happens for a reason. Every single time. The scary part is that there's a lot of liquidity to the downside to be taken, and there's plenty of downside targets, right? And obviously, we have a lot of reason to look for recession, look for depression. But let's go ahead, drop down to the weekly time frame, and let's take a look at what's going on. Right here, our last higher low, we have a break, a retest, and a new lower low. So we're currently in a recession because we're in a downtrend. All right. So if we take a look, what are the downside targets? Well, I would look to keep selling this until we come into this low point, into this fair value gap right here. We also have a minor fair value gap over here, but I'd really be keeping my eyes on this one right here before even looking for any type of buys. When we go to the daily time frame, we see just constant selling pressure, constant selling pressure. And we're in a very, very clear downtrend. We see this fair value gap get filled. Price is kind of stalling. There's also an imbalance up here that we could keep an eye out for. But let's go ahead and pull out our Fibonacci and look at the range that we're in. So price kind of came to a neutral range. We're still in buyer's territory. We'd go down to the H4 to kind of see what's going on here. So if price decides that it doesn't want to break past here, then we can anticipate this low to get taken out, and we'll go and see that weekly as a target for this year. However, we'd have to monitor up until next week. They did something very weird in moving the NFP a week. NFP is the non-farm payroll, affects the US market quite significantly. And we see that we decided to do that. So again, we're taking a look and seeing price action in a uptrend on the H4, but we're in a key area on the higher time frame. So it's something to know. Looking at where we're expecting this fair value gap, we could see price just go lower. We see price bouncing off this 79, but it's really not getting too much strength. So we'd really want to anticipate this low just going low. And honestly, I literally might log into my account and short this right now, but I'll probably wait till New York session. But in any event, I'm still bearish. Should this wick get broken out, then we know that we can anticipate higher targets and, you know, probably look at this fair value gap over here. But for now, I'm looking at this. It could easily come here and just keep going up until it breaks 33,000. I'm very bearish on this pair. And right? My wife just scared the crap out of me. My goodness. Anyways, I'm very bearish on this pair until we break out of this. So let's go ahead and take a look at NASDAQ. NASDAQ is going to be the same thing. You know, Dow Jones, NASDAQ is the tech. Is going to the NAS 100 going to move the very, very similar. Very, very similar. So if we go ahead and take a look, we see very similar movement. For downside target, I don't really see nothing on my monthly time frame other than these double bottoms right here. But I want to look for a fair value gap. When I go down to the weekly, I don't see anything off the top. However, this chart right here off the structure is going to tell me a lot. So we see a break, a retest, and a follow through, letting us know that we're in a downtrend. And we are in our short-term high, short-term low, and we see price. If we push lower, it could create an M and keep going higher. But let's not speculate too much and see where we are in the market. When I look at the daily time frame, we have this fair value gap right here. We're in this range right here. And we're kind of just going to be waiting to see what price does. Seeing that we're in here, it's not really a place I'd want to short at, just because of how much momentum this candle had compared to here. When I drop down to the H4, however, yeah, it looks like something that I would want to be bullish on based off of structure. I see this fair value gap here, and I see this fair value gap here as potential low points to attack. If I were to day trade, I'll drop down to M15 and look for some type of buy over here. But being that it's Friday is not something that I'd really want to touch. Let's go to take a look at Amazon and take a look at where we're at. So again, Amazon is another one of those things that has just been on a huge uptrend. Eventually, Amazon will have a retracement too. Amazon will retrace too, yes. But our flowing with the current trend, this is not a bad place to buy. seeing that we're sitting in this fair value gap, sitting in this tapping this order block. It's not a good place for it's not a bad place for a short-term buy. I see these double bottoms right here. And if I go to the weekly time frame, obviously we see that we had a break, retest, follow through. Again, what do we see? W sells. First, we had a little M on the daily. It's probably a M double top. It bought and then it sold, but really it's a big W. So we see price kind of consolidating over here. And obviously we see that this mimics the Dow Jones quite significantly. We have this fair value gap, and we also have this is going to be our range. So we are in a discount range. We are in a buying territory, seeing that price finding support here in the fair value gap. In here, I would look to probably get out if I'm in any buys. For those of you that are buying this this stock, you know, it's been really just consolidating between 130 and 101. So there's really not much to do unless you want to take the buy. I would definitely take profit once we get, you can honestly take profit at 128 or start taking profit once we get past the 50% mark and into that premium range. You know, what I would do is if you get a buy here or you got a good lower buy here, come here, take some profit off the table, pay yourself, make it real, and then look to take profit in here. All right, so that's pretty much it for this video, guys. I hope you took notes. I hope you gained some value of it, and I hope you guys have a lot of trading success. I hope you guys learn a lot from this. I hope that this stuff does not go in vain, but that you guys take notes. And yeah, God bless you guys in Jesus' name. And I hope that you gain some value and continue pushing through. And just use this time to study, man. Use this time while you're on the sidelines in this bear market to just study, and really just get better at whatever it is that you need to get better at, whether it be, you know, being a better husband, being a better father, being a better wife, like literally different things like that, that this is the time to really work on it. You know, we got this running challenge. It's to encourage you, man, to really lock in. You know, when it's on the bull run time, it'll be the bull run time. But that's when you gotta lock in. And so yeah, I'll leave you guys with that. God bless you guys, and I'll see you on the next video.